crash that I wanted to happen in the NASDAQ finally decided to happen after we bought into some calls. So we clearly sold those calls for a loss today. We bought into puts on the way down for plus 40%, so that made up for it. And of course, you know, if you see the dip today, we definitely bought into the dip. So in today's video, we're going to go over the stock market. We're going to go over the crypto market. We're going to go over the bond market. And we're going to see why all of this is going on right now and what this means for the rest of the week. So thank you guys so much for your likes, your comments, your subscribes, your follows. Thank you so much. And let's get started with the video. All right, so here is the big puke that we were waiting for, right? Tomorrow, what might end up happening is we might fall much lower. We're gonna get to that in a second, but right now you can see that the NASDAQ is trading well below the lower level of the B band. And of course, if you've been following me for the past year and a half, and if you can look at the charts on your own, everyone can see that every single dip for the past year and a half has been bought beautifully. Every single time, all throughout this entire move upward, every single time we did take a dip to the downside, people were calling that would be the end of the bull market. Okay, so that clearly has not been the case yet, which is why I'm so aggressive in buying calls to the downside, especially when we see extreme weakness. So clearly the NASDAQ is in that position right now. You can see that it held support above the 50% fib level at 349.54. It had a low of 350.32 today, right? So what I did and what I shared with my followers today on Twitter for free, by the way, is that I bought into IWM calls expiring October 8th as well as October 15th. So the reason why I got into IWM calls was because overall the IWM and the 10-year yield seem much stronger than the 30-year yield and the NASDAQ. So my thesis is that the IWM will be leading in the short term compared to the NASDAQ. And since the NASDAQ looks like it's going to bounce, I wanted to get into IWM calls because I thought that the IWM will bounce more than the NASDAQ. Okay, so we'll check to see if that is going to be the case in the coming weeks. Anyway, currently, you know, we're trading right above support. I do think that the NASDAQ can fall below this 349 level tomorrow and then go potentially to 347 to 348 and then find a bottom. That by that point, it'll be way more overextended to the downside of the B bands, which will be a much better buy opportunity. And of course, then I do believe, you know, we're gonna buy into calls much more heavier. So currently right now, today we bought into puts on the way down here in this move. We sold them out for plus 40%. And then, you know, we bought into the dips. So now we're just waiting for a potential bounce. So tomorrow we might end up falling lower. That's fine. We're gonna buy in heavier. All right. So there's the analysis on the NASDAQ. So now it's really important to go ahead and check out the 30-year yield to get a better understanding of where the NASDAQ might go. All right, so this is the 30-year yield. All right, a few days ago, we saw that the NASDAQ found support, or the 30-year yield found support. It was very overextended to the downside. We bounced. Things looked much better for the 30-year yield, right? But what was important was that we needed to cross above these key levels of resistance. Now, the worst part about this is that the 30-year yield is currently it worked off of its entire oversold condition on the MACD, and it could not even break above resistance. So that is very bearish and not a good sign. It would have been much more bullish if the 30-year yield would be trading up here and the MACD would look like this. But the fact that we're still trading relatively close to the lows, but the MACD bounced essentially all the way out of oversold is not a good sign. And of course, if the 30-year yield goes down, then the NASDAQ shows extreme weakness and the NASDAQ goes down. Okay, so clearly right now the 30-year yield does not look too good, and that is a big reason why the NASDAQ fell. Now let's go ahead and take a look at the IWM. So here is a chart of the IWM, and you can clearly see that the IWM is holding up much better than the NASDAQ is. It's not trading on any of its lows. It's actually within a bull flag formation. So it did fall out of it a few days ago, but now it's within a very bullish pattern. So we can clearly see the NASDAQ, or the IWM, is outperforming the NASDAQ, right? And that is primarily due to the weakness that the NASDAQ was showing, as well as the weakness in the 30-year yield. So the reason why the IWM is leading currently is because the 10-year yield is very bullish. And when the 10-year yield is bullish, then the IWM is bullish. You can see that the IWM held this 38.2% fib level at 220.19 very nicely. And 220 in general is a very key psychological support level. And the fact that the IWM still held up when the NASDAQ was puking all over the place today is very good news and strong for the IWM, right? So now let's go ahead and take a look at the 10-year yield to see where the true strength in the IWM is really coming from. So here is a chart of the 10-year yield, and you can see that it's clearly breaking out. It broke out of a bull flag, and it had a few days that it was falling, but now it's found a bottom and it's starting to bounce back. So that is very bullish for the 10-year yield, which is bullish for the IWM. Okay, this movement in the 10-year yield right now was the reason why the IWM did not fall as heavily as the NASDAQ did. Okay, so the fact that the 10-year yield is showing the most strength, the fact that the 30-year yield is showing so much weakness, that goes into my thesis that towards the end of the year, especially right now in the short term, the IWM will be the leading indice and will outperform the NASDAQ. So we just have to continue to monitor the movements here. You can see that this does look like a potential bull flag forming on the 10-year yield. We bounced off of these important levels of support, and now essentially we just need to see if we're going to cross above 1.5, 1.53, the important levels of resistance here on the 10-year yield, right? So now let's go ahead and take a look at the SPY. All right, here's a chart of the SPY. Obviously, it does not look as bad as the NASDAQ, and it does not look as good as the IWM. It's basically somewhat in the middle, right? So basically, this is going to key off of the weakness in the NASDAQ. Okay, so essentially, it doesn't look too good. That's fine. The RSI is pointing downward. The MACD is oversold. We closed below multiple important levels of support. But I mean, all of these things do not truly matter. It really all depends on the bonds and the NASDAQ, really. That will really determine the trajectory of the market moving forward. And the SPY currently, obviously it closed below this blue uptrend line, the channel, and it's, still there's tons of room to the downside because there's we haven't fell outside of the lower level of the B band. But given the fact that the IWM is sitting above support, given the fact that the NASDAQ is also sitting close to support as well, and we're very overextended to the lower level of the B band, I do feel that regardless of whether we fall again tomorrow, I do think that the dips that we buy today and tomorrow will be very beneficial. And I'm just going to continue buying dips while maintaining our risk reward and managing our positions, so that if we are wrong, we get out at a good price point, but we stay in the favor of the trend. So the trend has been consistently going upward, right? So we're not going to start randomly just shorting everything right now, right? Instead, if we show extreme weakness, it is a much better, higher probability trade to buy into the dips. Okay, so clearly right now the NASDAQ is prime for that right now, right? The SPY will bounce along with the NASDAQ and the IWM if the NASDAQ stops falling so heavily. And that's really it for the SPY. I guess now we can go ahead and take a look at the dollar. So the dollar falling is usually a very good thing for the stock market. It means that when the dollar is falling, that means that all of the money is going into stocks. Okay, so essentially, when the dollar goes down, it is a good thing for stocks. But the correlation clearly wasn't there today because of the huge weakness in the equities market as well as the 30-year yield. And very quickly, crude oil is making new highs and it is skyrocketing, which is not the best sign in terms of inflation. But regardless, crude oil going up is a beneficial factor for the equities market. And essentially, as long as crude oil is up, we can use that as a clear sign that the equities market is not going to fall or tumble. Crude oil does not do well in environments where the stock market is going to crumble. Okay, so just keep that in mind as well. The fact that crude oil is very bullish. Okay, so there is my analysis on the stock market. Let's go over the crypto market. So we can see here that Bitcoin is just showing extreme strength. It didn't even bother retracing down as much as I thought it would. We just continued going on higher, and now we are clearly at this 618% fib level at 49,114. So that is the next level of resistance. If we can close above that, then things look really, really good. The fact that Bitcoin just is bounced like this and is continuing to break above resistance levels, especially with Ethereum. Ethereum is lagging behind Bitcoin. So as Bitcoin leads, Ethereum is going to be lagging. So that would be a good opportunity to load up on Ethereum and NFT coins and other altcoins as well. So in general, Bitcoin looks pretty bullish. Ethereum is lagging behind. And you can see that Ethereum is essentially the 618% fib level for Ethereum is like 3,592. So we are $200 away from where Ethereum would be if you compared it to Bitcoin. Okay. So clearly, the crypto markets are booming and doing very well as well. Oh, actually, we should go over the Chinese market. Yeah, so the Chinese market did not do well today. And that was, really another big factor in why the overall stock market did not do well today, because of the entire Evergrande situation and, the scares of them defaulting. So if they defaulted, then it would not be good for the entire Chinese market, which would not be good for the international markets. So that's what the stock market was also keying in on today, the weakness in the Chinese markets. So I really hope you guys enjoyed the video. I hope you guys enjoy all of the content that I put out completely for free on Twitter. If you guys enjoyed the video, please turn on bell notifications. Please subscribe, follow, like, do all that good stuff. And I will see you guys tomorrow. Thank you.